The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Aloha from TFNN. Welcome to the February 13th, terrific Tuesday, Lanai, Hawaii edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes. And I believe we should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past, 1 o'clock in the afternoon on the East Coast, just past 8 o'clock in the morning where I'm at. So live from Lanai, this is, of course, terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now we have the Dow. Let's see what it is here. We've got the Dow off 198 points, actually. It's down 98 points. S&P off 6. NASDAQ is off 7. Russell's down 3. We've got the transports up 10 points. Gold is up $4. Leading the charts, the upside today, dollar-wise, it's Amazon up $16. Dun & Bradstreet up 11. Wevo Corp up 11. Martin Marietta up 8. AutoZone leading the charts, the downside. Big hit here. $21, that's about 3%. Regenerant Pharmaceuticals off 5% or $18. Domino Pizza, it's painting the screens with pepperoni. It's off $8 or about nearly 4% to the downside. Would love to hear from you. You can always give me a call, 877-927-6648. If you can't call in, you can send me an email. I'll do the best I can to get to it. I'm a little bit hamstrung, so to speak, today because speeds are slow. So, and I have, my screens are a bit, I don't know what to say, squished would be that's a good technical term. But I'll do the best I can. You can send me an email, steve@tfnn.com, and inside the Tiger's Den, any ping will do. I'll just simply, hopefully, post each and every chart that we take a look at. So the first chart that I posted in the Tiger's Den for you was the daily profiles for the ES Mini, the NQ, the Dow, and the Russell 2000. And what I want you to do on any of these charts that I post, just because of the way that this technology is working here at the moment, is just look at the prices and look at the lines. When you take a look at market profiles in this chart, you're going to see green, blue, or cyan, really, and red, and look at where those prices are versus the information inside the data box, because the data box could be wrong depending on where my cursor was at. When I was able to actually snap that photo. So as you're looking here, the most interesting thing that has occurred over the last 24 hours has been that the NQ has been the one from a daily perspective that has formed a new market profile. Now, this one, as you would expect, with the huge movements in price that we've seen, what you would expect is, in fact, a large profile. And this one is a doozy because it runs from 62.46 to 68.23. So you're nearly 400 points with regard to a profile. That's a big one. Now, price is sitting about 65.16 or so right now. So the point of control, the center of the box, 65.75, we're basically hanging right around where both buyers and sellers are, let's say, most comfortable, most fair value out here. If price is able to move above the 65.75 level, you should anticipate that it will move up to 68.23. And I do believe that's where it's going. We'll take a look at some of those reasons why. Now, support on any flush to the downside should be at about the 62.46 level. So that's the most interesting thing with regard to the market profiles that are available to us. We can also take a look at the weekly profiles. We're going to try to go ahead and snap this picture as well. So that should be should be you should have the weekly now that you can see on your screen. And in speaking of the NQ, what you're going to notice here from a weekly perspective, this formed last week. This has a very narrow range to box out here. And this shows that support from a weekly perspective now at the 64.27 level. So forget about the number that I gave on a daily box. I don't mean forget about it. But what I do mean is that until 64.27 fails to hold as support, you should forget about the lower daily profile level. Likewise, what we have here is you have that center of the box on the daily, and you've got the top of this weekly. Now it's 65.65. So the real number to be focused on and paying attention to help guide you, whether you're long or whether you're short, and what you should be watching is inside the NQ at 65.65. If you see, and you can see that is where price this week has contained itself. Price ran into that level, maybe not exactly there. It got up to a price point of 65.67 versus 65.65. It is no miracle that is where the bounce stopped thus far. But that does not mean that the bounce is over. And you can say, come on, Steve-O, how in the Sam heck can you say that? Well, let's take a look at the VIX index out here and take a look at the spot VIX index. Right now, it's up 54 cents. It's trading out at 26.15. I want you to take a look at February, March, April, May, June, July, August. And I want you to take a look at where those spot VIX index futures are trading. February is at 25.89. March at 20.50. April 19.50. So the spot volatility index is way out of control here. And it's going to get in line. And it is going to get smack dabby. And this is going to get in line, and it's going to get back below those levels. And as that happens, what you're going to see is you're going to see these markets continue to move higher. That's right. The markets will continue to move higher. So what you have here is you've got some levels of support to be focusing on inside of the NQ, because that's one from a profile standpoint that's providing you and I with the most amount of information. And if we take a look at the last 2 days out here with regard to the volatility index, when you have a rate of change, in this case here, we're taking a look at a declining rate of change that is below minus 10%. So minus 10% or below that, I think that's the appropriate way to say it. And over the last 2 trading sessions, we've seen that. Back on February 9th, you saw a minus 13. Then yesterday, you saw a minus 11.87. Those are called initiation moves. Those are the green arrows on my chart. Doesn't mean that prices can't move sideways inside the S&P. This is an SB chart that you're looking at as well. But what you just received here are the signals that this rally, or maybe it's a counter-trend rally, is going to continue. So if you're on the short side of this trade, be careful. Steve Rhodes with TFNN, live from Lanai, my favorite place on this planet. Of course, being with you is my favorite place as well. We'll be right back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow 35, S&P about flat right now. NASDAQ 100 up 3 points. For those of you not familiar with where it is that I'm at, which is Lanai, Hawaii. It's the small island across from Maui, and really across from Molokai as well. And I've been coming here for 25 years, I think 27 years actually, at this stage. And when I say small, I mean small in the sense that it is very private. There's about 3,000 people that actually live on the island. It's an island that used to be owned by David Murdoch. David Murdoch, not Rupert Murdoch, not related to that individual, and used to be one of Dole Pineapple's primary plantations. But over the years, because of pesticides, things of that sort, was harming the residents here and things of that sort. And so Murdoch decided to go ahead and turn this into a resort. So on the south side of the island, which is also about the driest side here, although it's a pretty dry island, but certainly the drier side of the island, built a beautiful resort. It was called the Manele Bay Resort back then. I mean, just simply gorgeous. Now, you have to be someone who is a human being versus a human doing, right? Most of us are human doing things out there, and many of us struggle with just being. And so when you're here and you say, hey, what are you doing? Well, you're just being, and now being can mean sitting on a catamaran with, maybe 2 or 3 other couples out there and just simply cruising the Pacific, watching all the whales jump and things of that sort. But, if you want to truly experience Hawaii and you're looking for relaxation and just amazing level of service, this is where I'd recommend that you spend some time. Now, Murdoch, about 8-9 years ago, as he was aging, decided that he wanted to find somebody else to steward the island. By the way, Murdoch owned 97% of the island, and many of you folks may know that Larry Ellison from Oracle decided to purchase the island. It's not like he's a young chap as well, but, he has put some really nice money into this place. And this morning, I just, as I'm doing the show, I just got a report. We're on this little bay out here, and what's nice, this is whale season, but what's nice is the dolphins typically come in every morning and just schools of dolphins. And you can, you're swimming in the bay, and they're also out there as well. Just a cool sight to participate in. And so it's one of the reasons that I come here. And, wish that I had better connection, so to speak. But we will somehow get through this storm out here. So let's take a look at some other. So, we've covered thus far is I've given you levels of support and resistance, and it's primarily inside the NQ to pay attention to. We've taken a look, and what I want you to do is I just want you to think through this, and I want you to go back and do the homework as well. And that spot volatility index, which seems to have been trashed a lot lately by the media, I want you to be able to use it to your benefit as far as being able to identify what the markets are doing and what it is that needs to happen. What it needs to happen is either those future contracts are wrong or it's a spot volatility index. And if you go back and you do the homework, if you go back and you study instances when that spot volatility index gets out of whack like that, it is not the futures contracts that are wrong. So the futures contracts are saying, you know what? No problem. No problema. And so this rally is going to continue. Now, you don't have to believe me. All you have to believe are those resistance zones that I gave you inside the NQ, and then watch what happens. And yes, what I am saying is that you can take a long position inside these markets. And very likely, what it is that we're going to see, now look, there's a resistance zone inside the NQ. We gave that figure, so you're going to have to focus on that as well. But very likely what we're going to see is the markets are going to go all the way back to their all-time highs, and, here's the and, they are going to continue higher. The correction that the market needed, it was long overdue. I don't have the exact number of months out there, took place. This is not the beginning of the end. This is the beginning of the next move higher inside these markets. So go back, sift through charts. What if you believed, or what if you knew that these markets were going to head back to their all-time highs? And what we're seeing out here is not, I repeat, not a counter-trend rally. What other piece of information do we have out here? Well, we can go take a look at. Let's go ahead and post these charts. We can go take a look at the advanced decline oscillator lines out here, the summation index, and that's what we've posted here for the New York Stock Exchange, for the NASDAQ Composite, and for the Dow. They're very close to getting to the zero level. They're not there yet. The NYSE is at minus 102.69. When that little puppy gets above its zero level, and the NASDAQ Composite may be the first to do so, could even be the Dow, quite frankly. But either way, once one of those gets above zero, then things will be off to the races back to the upside. That's right. And where's the spot volatility index headed to next? The number to be watching is probably about $20.43. That is the top of its Bollinger Band, the type that Stevie uses out here. And once below that, now that number's going to change, over the coming days. And I won't be able to be with you each of the days for this week out here, but I'll do the best I can to be with you at, 8 a.m. my time. But I can provide you with information that you can monitor and you can watch yourself out here. And below about the 2043 level, then all you need to do with the spot volatility index is pull up the 50-day exponential moving average, because that's where price will head, 1574. And as that happens, the S&P is going to continue to motor on higher to where you say back to its highs and take them out. This is the move that you've been waiting for. This is the retracement. This is the correction that you've been waiting for. You can back up the trucks, folks. These markets are going to move higher. The technicals just need to get back in line out here. So watch that advanced decline oscillator reading. For those of you not familiar with it, I did a workshop before I left for Hawaii. If you sign up for my newsletter service, they will give you access to that workshop, as well as a couple others that you'll want to have inside your bailiwick out here. Now, we've seen, as price inside, if you study the charts that I post in the den, what we've seen out here is we've seen that prices were moving lower, but the advanced decline oscillator reading was not confirming that, meaning it was making higher lows. Now, when it makes higher lows and price makes lower lows, that's a divergence, and that type of divergence gets resolved, meaning that price starts moving to the upside. The same exact pattern, if you look at the New York Stock Exchange, you look at the NASDAQ composite element of what I posted, was present when that high was formed out there. That's right. Prices were moving higher, but the advanced decline oscillator reading was moving lower. It was making lower highs. So the exact opposite pattern is what is in play right now. Lastly, I'll go ahead and post these charts here for you because this is the real kicker. And in order for my theory to be correct, we'll take a look at this when we come back from the break. The ES Mini needs to stay above 26.28 and a quarter, or 26.18 really. 26.18 is the number. I don't think we'll see it again. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the chart that I posted just as we were going into that last break shows the ES Mini. That was in the upper left-hand corner, the NQ, the upper right. Lower left was the Dow Equity Futures Contract YM Russell 2000 to the lower right. Many, many years ago when I was studying the stars, and I do mean many years ago, I was always looking for an edge, right? Aren't you looking for an edge inside this market? And that's in essence what you and I have been really talking about all morning since I've been on the show. We've been taking a look at sets of tools that provide you and I with an edge. right? Because what you and I are, we are doctors of this market. We're students of psychology to understand when the markets make tops and bottoms out there. We do our best to be able to do that and to be able to use a set of tools that assist us along the path out here. And if we take a look, and so what I was looking for when I was taking a look at all the planetary alignments, all the lunar alignments, I was looking for something that gave me a consistent edge, and spent thousands of hours, literally, and many thousands of dollars looking for that edge. I found one. It was really kind of accidental. You know how I say things happen for you, not to you? Really, I found two things in doing that. I found the pattern that was present before every major bear market. That pattern is not present. That pattern is not present now. The time we got was the gift. And now what we have is we've got a march back up to the highs out here. Now, if I'm correct about that, the second edge tool that I found was taking a look at when the moon was either at apogee or perigee. Apogee when it's furthest from us during the cycle, and perigee when it's closest to us. And how this works, I don't know. I just know that it works. I know that it's an amazing edge. So if my statements are correct, and the market made its next major bottom last week on Friday, then we will see the ES Mini continue to trade above its apogee pivot point. The price where the ES Mini was trading when apogee came in. Now, apogee actually came in, the moon furthest from us on Sunday when the markets were not open. That's why I have 2 price points on my colored screen out here for each of these contracts. All my work, all my study was done on the ES Mini to prove that it was an edge. So the mere fact that it didn't work on the Russell, my work wasn't done on the Russell 2000, its equity futures contract, and the levels of 1476.50 and 1478.50. But I can share with you. And since ES Mini formed, now, because it happened on as I say, on a weekend when the markets were closed, I don't know if it's the close on Friday or the open on Sunday evening, which is why both of those are marked out here. And the move down at 10 o'clock in the morning, it's a 30-minute chart that we're looking at, back on February 12th, that was yesterday, found support right at 26.18. Look, folks, that is another indication that the market has formed a bottom. This is a higher bottom area, but that was an important level. And if what I'm sharing with you is correct, if my conclusions are correct out here, then the ES Mini will need to trade above 26.18. If it doesn't, and it starts moving below 26.18, you can say Steve-O was full of a lot of hooey or Hawaii. I'd prefer you say he was just full of a lot of Hawaii out there, and then we'll come back and try to figure things out. Now, we've got a couple questions that have come in. James writes in and says, wow, what do you think about the CME being sued for VIX manipulation? Actually, James, I didn't know that they were being sued for VIX manipulation. When I come to Hawaii, I check out. I check in here, but I check out basically of life. I don't have the TV on. I don't read the newspapers. My phone pretty much is not with me. I just have my camera equipment when I'm on the water, my binoculars looking for, whales and, other. And, hey, we've been catching fish. We've been catching fish while we've been out, cruising for whales and so forth. So I don't know. I don't have any thoughts on that. Thanks for writing. What I do have thoughts on is what we talked about with regard to where the spot volatility index is trading and its futures contracts, and knowing how that is going to resolve itself. The spot volatility index will get back in line. And as that happens out there, folks, the S&P 500 is going to continue moving higher. So thanks for taking the time to write, and hopefully that tells you, I guess, really what it is that I think about them being sued. Of course, anybody can sue anyone in this world. So Robert writes in and says, let's see, hey, Steve, thanks for sharing info on your vacation. No problem. I'm long the GDXJ. What is your take on it? Thanks for your help. So let's go take a look at the GDXJ. I suppose what we should do, Robert, first is take a look at the gold and see what kind of information that we can provide there that you can be paying attention to. So let's go post this chart here for Goldilocks. And If we take a look at gold on the 30-minute chart out here, what you're looking for is for gold to stay above basically 1325.80. It's inside. Right now, gold is trading inside this box. The bottom is 1325.80. The top is 1330. If we take a look at the 240-minute time frame, gold is about 1324. So that 1325 on the 30-minute kind of coordinates and correlates with the 1324, the top of the 240. So that would say, okay, things remain bullish out here. The beauty with regard to gold is that it formed a brand new daily profile. That's the one that you really want to be focused on. So, Robert, I would suggest to you that as long as gold can stay above, close above 13.1350, that's the bottom of its daily profile. And what you'll notice from the posting is that at 13.2260, that's the center of the box out here, that is closer to the bottom, because the top of the box or resistance is 13.5430. So just by taking a look at what's going on inside gold, and hey, let's not forget to look at the weekly time frame. The weekly time frame gives a nice bullish structure, just like the daily is a bullish structured box here. And it's got support at 13.19. Now, price is trading right into its point of control. Again, the place where both buyers and sellers are the most comfortable. 13.2220 out there is the number. Once price clears that, Robert, your trade inside the GDXJ should continue to perform well and should continue to do so as price approaches the 13.54, 13.57 level. When it gets up there, I'm not sure what's going to happen. And so you'll want to pay attention, maybe tighten up your stop a bit on that trade. And if, in fact, you can see gold close above that, that will be good. Now, we haven't really looked at the GDXJ just yet, but because we're trying to understand the underlying instrumentation in flying this plane out here of, making sure we've got enough fuel. Because if the gold is headed lower, you're not going to have the type of fuel you want inside of the mining trades out here. And by fuel, we still need to see gold priced in euros. I've got the chart on my screen. I think it probably works best if I post that for you. We really want to see gold priced in euros move higher. When I say move higher, right now it's making a series of higher lows out here. But we really want to see it get above about the 11.06 area, 11.10 area. If it could do that, then we could say, hey, there's a breakout in gold, and therefore you would have a breakout inside of the GDXJ. When we come back, I'll go ahead and throw the GDXJ chart on your screen, but you've just gotten all you need to know. Steve Rhodes with TFNN, live again from Lanai, Hawaii, the most beautiful place on the planet. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So I'm going to go ahead and post into the Tiger's Den the GDXJ, just simply so you've got that information as well out there. And you'll be able to see its market profile. So we're going to do that here right now. And again, what you want to do is you don't really want to pay attention to my data box because I never know at this stage here. I'm working with very limited space, and it's almost amazing that we're actually doing the show. Of course, I have to call in on my phone. And the reason I have to call on my phone is I can't get Skype to power up here, and I've got pretty good speed. And come on, Larry Ellison, he's not a slouch, so he's got some. But look, I'm running a number of different things out here, so it's not the type of speed that I have at my home. So just pay attention to the numbers on each of the charts. You've got daily, weekly, and monthly charts out here, and just pay attention to the profiles on the right-hand side. In this case here on these charts, both the low, the bottom, the center, and the top of the box are all in light blue. So just take a look at those light blue numbers. For example, on the daily chart, you're going to see 30.66 is the bottom, 31.44 is the center, and 32.61 is the top of that box from a daily time frame. And 32.61 is where price is headed to. That's what it looks like to me. And if we take a look at the weekly chart, the bottom of this box is 32.96. So what that's telling you is that that's going to be a resistance zone, and if price can get above that, hey, then that's good for you and good for your trade, and would say, okay, you're back inside that box, so, hey, why not try to get to the 35, 45 level out there? And then you've got the monthly. Monthly shows really the GDXJ has just been stumbling around since about November 2016. What are we? We are in 2018. So it has just been stumbling around in a range between 39.08 and, in essence, 29.01. And there's not anything out here just yet to tell us that this range is going to break. So perhaps just treat this like a trade. And if we were to see both gold in dollars and euros moving higher, then that message would be stay with that trade out there. All right, my friend. So that was for Robert. I don't see any other messages. Sean sent me a message, but just a piece of information, not really a question that's out there. Of course, I want to be able to answer or provide you with whatever information I can for each of the trades that you are in. I don't see anything inside the Tiger's Den, but I'm working with limited space. If you requested something, would you be kind enough just to go ahead and post it back in on inside the den, and I'll make sure that I get to that. So that begs the question of, so what do we do next? Where do we go next? What do we look at next out here? Because we've covered gold. In essence, we've covered the mining trades out here. You know, what else is it that we should go ahead and look at? What should we look at out here? I let's look at let me see here, the 30-minute chart for the ES Mini, because this is really a cool chart. I talked about when I was searching the planets, when I was searching the moons, and hey, I'm going to be up in the stars next Sunday. I'll be up at or going to be attempting to get up to the summit at Mauna Kea on the Big Island. Now, the Big Island had 8 inches of snow last Monday out there, and the winds were whipping. So the weather patterns changed pretty rapidly around here. On Thursday of this week, we were out whale watching. We charter a boat. We were out whale watching and snorkeling. And for those of you that have been to Hawaii, you're familiar with Molokini. It's probably one of the more popular snorkel spots in the world out here. And this time we were on the back side of it. Most people snorkel or scuba dive on the front side of it. We went to the back side, and the waters were calm as can be. And talk about how weather patterns can change out here. And we got caught in a major microburst. I mean, we went from flat seas, and we were on the back side of the wall. And the wind was coming from the, where's it coming from? Let me get my bearings out here. It was coming out of the north. And literally, in just minutes of time, we went from flat to 6 and 7 foot seas out there. Thankfully, we weren't in the water. Not that that would have been an issue. It was just getting back into the boat that would have been the trip out here. So hopefully, I'll get a chance to go visit some of those stars and get up to the summit at about 14,000 feet out there. But like I said, I was going to go ahead and post this chart out here because it really is. And this chart here is a 30-minute chart. I mentioned, the pattern that's associated with every major bear market, which is not present. It is not present right now. That makes me conclude that what we've seen is just an overdue correction, the type where you want to go ahead and look. If you have been hanging on to capital, you've got cash on the sidelines, put it to use. Put it to use. That doesn't mean we're going to, I cannot control the markets. You know that. I wish I could. We can only control the decisions that we make, and the decisions that we make are sometimes there's some type of event that could just simply derail all of this great technical analysis. And that's why you go ahead and use stops, and you try to limit your losses. But right now, as far as your long-term capital, now, that's not a knock at the door. That is me knocking at your door. Now is the time to go ahead and put it to use out there. Now, if we take a look at this 30-minute chart for the ES Mini that we just posted, beautiful thing. Off of Friday's bottom out there, price was moving lower, doing less relative energy. You get that nice bullish reversal candle. You get that piercing candle is what it was. Very next candle session where it's labeled A on my system, that's doing that wave count, closes above Stevie's red line. And that's a beauty out there. And then what does it do? It goes ahead and moves higher through yesterday. And where does it end? It ends with making and singing in the key of G, that 7th wave move up there. That was yesterday's top. You're really looking for yesterday's high to get taken out to give you a confirming message that this market is ready to roll higher. And all that's taken place is a beautiful, nice, shallow retracement since singing in the key of G out there. And what it has not done is has not taken out the retracement did not come back into this swing point and take out the swing point out here from about 10:30 and 11 o'clock in the morning on yesterday, February the 12th out there. That's another little bullish sign. And we can see that the price oscillator is at 0. We can see how price is off of Stevie's red line, is bouncing off of that. Again, short-term bullish out here. But from a short-term standpoint, watch to see if, in fact, price gets above 2671.50. You're 2661 right now. You get above that, this whole chart recycles. And that is another message of these markets continuing to move higher. We've got a request to go take a look at bonds from Danny in Atlanta. So let's go do that for him. Let's see if we can pull that up out here, Danny. And bonds, the message out here, oops, may take me a second to do this. It's so crazy the way I've got to use this system, and it is pretty time-consuming. But, hey, we're here. We are a team. So we'll put up with a little time-consuming when we have to. There we go. Hopefully that chart posted for you. And just give me the high sign that it did. And here's what we know. we've got the 30-year Treasury. We've got the March contract for the 30-year Treasury. From my standpoint, this thing is still a bearish pattern and will be until price can close above Stevie's red line. Stevie's red line, when it comes to the 30-year Treasury, has acted as resistance since the date of January 2nd. See how every time price comes into that level, it's knocked down. Yeah, it gets knocked down. So my take, bearish on T-bonds. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Request to what's the oil contract that's being traded right now, guys, gals in the den? Let me see if I can pull it up. Looks like it is. It looks like it is March, but I just want to go ahead and make sure. Is that the case, Danny? Let's take a look at light sweet crude out here. So hopefully that is the case when we take a look at it. I'll try to get the market profiles up on my screen out here. So just bear with me for a moment and see if we can get these things here posted for you. So I've got, okay, so that's good. So we've got the weekly out here. Let me see if we get the daily. So the daily aren't going to really provide us with any more information than the weekly. So here's what we've got, Danny. I'm just going to go ahead and post this chart out here. Do my best to post it. Come on. Did that work? Did that post? Did that post? Let me see if it did. No, it didn't post. It posted the den thing. This is really complicated out here. See, did that post? Did that work for you? Okay, you got it. Okay. So So, Danny, when I take a look at light sweet crude, and the reason I don't have the daily profiles here posted for you, simply they were above where price is trading right now. So I don't have a good feel on this chart. I don't have, when I say a good feel, I don't have a level of support that I can share with you. Let me see if I can switch over here real quickly, Danny, and pull up my other chart. Let's at least look for Stevie's red line, and I don't have that. Now, see if I can do this timely here. I'm gonna post my Ninja Trader chart for you, or at least do the best that I can to post it in the allotted time. I just have to kind of manually stretch this thing, and then try to find where's the den. Where'd that go? Oh, I've lost that too. Did I lose the den? I think I did. Guys, I think I'm outside of the den and we're out of time. Well, that was timely to somehow get knocked off other than being knocked off by a voice out here. So, folks, hey, have a great day. Remember, these markets are headed higher. They're headed much, much higher out there. I'll do my best to be with you from Hawaii, but it certainly won't be every day out here as I enjoy this patch of paradise. So have a great day, and I'll look forward to seeing you soon. Take care now.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.